Hey everyone, welcome back to BullionIQ. I'm glad you're here today because we are diving deep into something huge in the crypto space. If you're holding XRP or thinking about it, this video is going to be extremely important. Make sure you stay with me till the end because I'm going to break this down in simple terms so you can understand why the market is moving the way it is and what could happen next. Trust me, there's a lot the mainstream media and even some so-called experts aren't telling you, so it's time to get the facts straight. Let's start with something shocking. I recently came across a clip from Jerome Powell, the Fed chair, back on May 4th, 2024. Many people don't realize this, but this is known as the day the Fed really lost control. Powell said, "I don't see stagflation." But guess what? 18 months later, inflation is still hovering around 3%, and the labor market is the weakest since the pandemic. Now, why does this matter for XRP? Because the bull run we all expected didn't happen the way it should have. The expectation was that XRP prices would skyrocket because the Fed was supposed to lower rates. Everything in the economic data supported this move last year, but instead the Fed waited. They delayed meaningful rate cuts until the end of the year, only stopping quantitative tightening on December 1st. That's just a few days ago. During this period, the U.S. should have had trillions more dollars entering the market, which could have significantly boosted all asset prices, including XRP. Meanwhile, countries like China, the EU, and the UK aggressively lowered their rates, giving their economies an edge. Now, here's where it gets interesting. Even with the US being reactive instead of proactive, XRP ETFs are showing incredible strength. The total net assets held by XRP ETFs are nearly $1 billion, and they're massively outperforming Solana ETFs. Considering the current state of the market and the delayed liquidity injections in the US, this is a very strong signal. Once quantitative easing kicks back in and liquidity is injected into the system, XRP is positioned to gain disproportionately. That's why paying attention to these numbers is so crucial right now. Another piece of the puzzle is Ripple's acquisition of G-Treasury, a billion-dollar corporate treasury management company. G-Treasury provides software for cash visibility, risk management, payments, liquidity optimization, and debt management for thousands of institutional clients. By acquiring G-Treasury, Ripple is integrating XRP into real-world corporate financial operations. This is a major step forward because it increases XRP's utility beyond just trading or speculation. Corporations can now use XRP for cross-border payments and liquidity management in real time. Ripple is not stopping there. They are strategically acquiring companies that enhance their position in the market. The approach is simple. If you can't beat them, acquire them. This is how they're competing with SWIFT and other traditional payment networks. By integrating these systems, XRP is becoming more valuable and more widely used, creating demand and reducing circulating supply. This supply-demand dynamic is critical because every reduction in circulating supply while demand increases can significantly impact XRP's price over time. Finally, let's talk about market psychology. XRP is currently on a downtrend, but history shows that the best opportunities often appear during these dips. Dollar cost averaging during this period while others panic could position you for substantial gains. The window may be limited, perhaps 6 months at most, to take advantage of these opportunities before liquidity and institutional involvement push prices higher. Understanding this strategy is key to navigating both bear and bull cycles effectively. Let's dig deeper into why XRP is positioned to benefit massively from both market and macroeconomic developments. As I mentioned earlier, the Fed's delay in cutting rates has kept liquidity low in the US, and that has held back the XRP bull run. But now things are starting to shift. The unemployment numbers are rising, and the Fed is finally being forced to act. This means that rate cuts and quantitative easing are on the horizon. Historically, these moves inject money into the system, and much of that liquidity flows into assets like Bitcoin, Ethereum, and XRP. So even though we've seen a slower than expected rally, the groundwork is being laid for a significant upside in the coming months. What makes XRP particularly interesting is the combination of supply dynamics and adoption. Unlike some cryptocurrencies that have enormous circulating supplies, XRP has mechanisms that reduce the amount of tokens actively trading on the market. When Ripple integrates XRP into corporate treasury operations or cross-border payment systems, it effectively takes coins out of circulation. This reduction in supply, coupled with growing demand from real-world use cases, creates a supply shock dynamic. You saw this in 2017 when XRP's price surged dramatically due to limited supply and high demand. Similar conditions are forming today, making XRP extremely attractive for long-term investors. Let's also talk about institutional interest. The total XRP held in ETFs is now approaching $1 billion, which is remarkable considering market conditions. Institutional investors bring a level of stability and credibility that retail investors alone cannot provide. These investors aren't chasing quick gains. They are focused on utility, adoption, and long-term growth. When institutions begin to leverage XRP for transactions, settlement, or hedging, it signals a new phase for the crypto market, and this is different from speculative retail hype. This is about creating a sustainable ecosystem where XRP becomes a critical financial infrastructure tool. Ripple's acquisition strategy further strengthens XRP's position. G-Treasury, as a global leader in treasury management systems, brings thousands of institutional clients and extensive cross-border payment experience. By integrating G-Treasury into Ripple's infrastructure, XRP becomes the bridge for real-time liquidity management and payments. Hidden Road and other acquisitions add more layers to this strategy. Ripple isn't just competing in the market, they're consolidating and building a dominant position. Each acquisition increases XRP's utility, making it more indispensable to corporations and financial institutions. Another point to consider is global competition. Countries around the world are adopting digital currencies and exploring blockchain technology. Europe, Asia, and Africa are moving quickly, and institutions are seeking reliable solutions. XRP, with its proven infrastructure and Ripple's strategic acquisitions, is well positioned to capture this growing demand. The advantage is not just speed and efficiency, but trust and proven functionality. Ripple has been tested over the years, and its solutions have a track record. Institutions prefer a tested solution over experimental alternatives, which further strengthens XRP's long-term outlook. Finally, we need to look at market psychology and timing. Even though XRP is currently on a downtrend, these dips create buying opportunities. Dollar-cost averaging and accumulating during market pullbacks can be extremely rewarding. The key is understanding that this isn't about short-term gains. It's about positioning yourself for long-term growth. As liquidity increases, ETFs attract more institutional funds, and adoption continues, XRP's price is likely to respond strongly. History has shown that timing your entry during these periods can lead to outsized gains when the market catches up with real-world fundamentals. Let's take a closer look at how macroeconomic factors are directly impacting XRP and why understanding these connections is crucial for any investor. The U.S. economy has been slower to react than other major economies like China and the EU, which aggressively lowered rates while the Fed delayed action. This delay meant less liquidity flowing into the market, holding back many asset prices, including XRP. But now the scenario is changing. With unemployment rising and job numbers weakening, the Fed is being forced to cut rates and potentially restart quantitative easing. This is important because increased liquidity often finds its way into assets like XRP, creating opportunities for both retail and institutional investors to benefit from the next wave of capital inflows. One of the most significant developments in XRP's favor is the role of ETFs. The total net assets in XRP ETFs are approaching $1 billion, which is impressive considering the current market conditions. ETFs are more than just investment vehicles. They represent institutional confidence and create a more structured and liquid market for XRP. When institutional money flows into these ETFs, it stabilizes the market and reduces volatility compared to purely speculative trading. This stability is essential for long-term adoption, as companies and financial institutions are far more likely to integrate XRP into their operations when price swings are less dramatic. Ripple's strategic acquisitions are also creating real-world utility for XRP. Take G-Treasury, for example. By acquiring this global leader in corporate treasury management, Ripple enables thousands of institutional clients to use XRP for cash visibility, forecasting, risk management, and cross-border payments. This isn't speculation, it's actual usage of XRP in financial operations, which increases demand and reduces circulating supply. Hidden Road and other acquisitions further enhance Ripple's ecosystem, consolidating their position as a major infrastructure provider. Essentially, Ripple is creating a self-reinforcing network where adoption drives demand, which in turn supports price stability and long-term growth. The supply-demand dynamics of XRP are worth emphasizing. Every token that gets used for treasury operations, ETFs, or cross-border transactions is effectively removed from circulation. This creates a supply shock similar to what we saw during XRP's massive price surge in 2017. At that time, limited supply combined with strong demand caused the price to skyrocket. Today, with Ripple's acquisitions and increasing institutional adoption, a similar scenario could unfold over the next months or years. The key is that this isn't speculative hype. It's grounded in real-world usage, which makes the potential upside much more sustainable. Global trends also favor XRP. Countries around the world are increasingly adopting digital assets and blockchain technology. Europe, Asia, Africa, and the Middle East are all exploring digital currency solutions for payments and financial infrastructure. Ripple's established technology and proven track record position XRP to capture a significant share of this growing global market. Institutions prefer solutions with reliability and compliance, and Ripple has demonstrated both. This global expansion, combined with ETF inflows and supply constraints, sets the stage for a powerful long-term bull case. Market psychology adds another layer to consider. Even though XRP is currently experiencing a downtrend, these dips create ideal buying opportunities. Investors who consistently dollar-cost average during market pullbacks position themselves for substantial gains when liquidity flows in and adoption accelerates. The next 6 months could be a critical window to accumulate XRP as institutional involvement and quantitative easing increase the available capital in the market. Timing entry during these periods can maximize potential returns, especially for those who are patient and focused on long-term growth, and why these elements are critical when considering XRP's long-term growth. Investing in crypto is never without risks, but understanding the market dynamics, institutional involvement, and Ripple's strategy helps mitigate some of that uncertainty. Right now, the market is still reacting to delayed U.S. monetary policy. The Fed's reactive approach to employment numbers and interest rates has slowed liquidity, keeping XRP from reaching its potential earlier. But this situation is temporary. Once the Fed begins cutting rates and injecting liquidity through quantitative easing, money will flow back into the markets and XRP could experience significant upward movement. The key here is patience and understanding market cycles. Competition is often misunderstood. Some investors worry about other cryptocurrencies, traditional financial institutions, or payment networks like SWIFT. However, Ripple's approach is not to compete in the traditional sense. They are strategically acquiring companies and building a comprehensive ecosystem that strengthens XRP's position. The acquisition of G-Treasury, Hidden Road, and similar firms allows Ripple to integrate XRP into real-world financial operations at a scale most competitors cannot match. This consolidation not only increases XRP's utility, but also effectively reduces competition by bringing major players under Ripple's umbrella. When corporations start using XRP for treasury management and cross-border payments, demand increases, circulating supply decreases, and price stability improves. Institutional adoption is another vital factor. ETFs, corporate treasuries, and large-scale partnerships indicate that XRP is moving from speculative trading to real-world utility. Institutional investors are looking for assets that offer both growth potential and functional adoption. XRP fits this criteria perfectly because it's not just a speculative coin, it's becoming a tool for actual financial operations. When large institutions integrate XRP, it creates a feedback loop. More adoption drives demand, higher demand reduces circulating supply, and reduced supply supports price growth. This cycle is reinforced by Ripple's strategic acquisitions and global partnerships, creating a strong foundation for long-term growth. Let's also examine the macroeconomic environment. While the U.S. lagged behind in cutting rates, global markets have been much quicker to react. Countries like China, the EU, and the UK have already implemented aggressive rate cuts and liquidity measures. Ripple's global strategy positions XRP to benefit from these trends. Corporations operating internationally will prefer an efficient, blockchain-based solution for cross-border payments and liquidity management. XRP's ability to settle transactions quickly and reduce friction makes it a preferred option, and this is likely to increase adoption steadily over time. Another aspect to consider is supply shock dynamics. XRP's price surges in the past have been driven by limited supply combined with rising demand. Ripple's integration into treasury operations and acquisition of major infrastructure companies further removes XRP from circulation, creating a scarcity effect. As demand continues to grow, particularly from institutions and corporate clients, even modest buy volume can lead to significant price appreciation. Understanding this mechanism is crucial for anyone looking to invest strategically in XRP. Finally, timing and market psychology are essential. Even though XRP is currently experiencing a downtrend, these periods are often the best opportunities to accumulate. Dollar cost averaging during dips allows investors to position themselves for gains when liquidity flows back in and adoption accelerates. The next 6 months could be particularly important as rate cuts and quantitative easing increase market liquidity. Retail investors who panic during market dips may miss out, while those who stay disciplined and focused on long-term growth could be rewarded handsomely. One of the most exciting aspects of Ripple's strategy is their focus on becoming a dominant infrastructure provider for digital assets worldwide. By acquiring companies like G Treasury and Hidden Road, Ripple isn't just expanding, they're building a network that allows XRP to be used in real-world corporate and financial operations. This is huge because it moves XRP from being purely speculative into something that institutions and governments can actually rely on for cross-border payments, liquidity management, and treasury operations. The more XRP is used for these purposes, the less is circulating, creating scarcity that can support future price increases. Stablecoins are another critical factor. Many people underestimate the role stablecoins play in driving adoption of blockchain technology. They act as a Trojan horse by bringing users on-chain without the volatility concerns associated with traditional cryptocurrencies. Corporations and individuals start using stablecoins for transactions, and once they are comfortable in the on-chain ecosystem, they are more likely to use other digital assets, including XRP. Ripple's infrastructure is perfectly positioned to facilitate these transactions, making XRP a natural choice for real-world payments. This integration could massively increase adoption over the next few years, especially in markets where cross-border transactions are common and traditional financial systems are slow or expensive. Global adoption trends are also moving in XRP's favor. Countries in Europe, Asia, Africa, and the Middle East are increasingly experimenting with blockchain technology and digital assets. Financial institutions are exploring ways to improve efficiency and reduce costs, and Ripple provides a tested solution that can handle large-scale operations. Unlike newer or less established cryptocurrencies, XRP has a proven track record, regulatory compliance, and a network of institutional partnerships that gives confidence to corporations looking to adopt blockchain solutions. This gives XRP a unique advantage over both competing cryptocurrencies and traditional payment networks. Price potential is a natural outcome of these developments. While short-term price movements are often volatile, the combination of increasing adoption, institutional inflows, reduced circulating supply, and global expansion creates a strong long-term bull case. Historical trends like the supply shock events in 2017 and recent liquidity-driven rallies show that XRP can respond strongly when real-world adoption accelerates. Investors who understand this dynamic and position themselves strategically can potentially benefit significantly over the next few years. Finally, let's address risk and opportunity. No investment is without risk, and cryptocurrency is especially volatile. However, understanding the fundamentals, Ripple's strategic acquisitions, ETF inflows, macroeconomic trends, and adoption metrics provides a clearer picture of where XRP could be headed. This isn't about chasing hype, it's about understanding the ecosystem and making informed decisions. The next few years are likely to be pivotal, with Ripple expanding globally, stablecoins driving adoption, and institutions leveraging XRP for financial operations. For long-term investors, this could be one of the most important periods to position themselves carefully and take advantage of market opportunities. To summarize, XRP's potential is being shaped by a combination of strategic corporate acquisitions, ETF growth, global adoption, stablecoin integration, and macroeconomic shifts. The Fed's eventual rate cuts and liquidity injections, coupled with XRP's increasing real-world use, set the stage for significant growth over the next few years. While short-term volatility is inevitable, the long-term outlook remains bullish for investors who understand these dynamics and position themselves accordingly.